Good morning and welcome to our daily crypto news podcast. Today, we're kicking off with a couple of major stories that have been making waves in the market. We've got a lot to cover, so let's dive right in.
Absolutely, and what a day it's shaping up to be. One of the biggest stories is the launch of Unichain, which has driven up the price of Uni token. According to the data, Uni's price rose by around 4.5% to $9.70 after the launch, but it didn't quite break through the $10 mark.
That's right, but what's really interesting here is that sentiment surrounding Uni has remained positive, despite the price not quite reaching the milestone. Social media posts about Uni are up by 30%, and a significant percentage of those posts are positive or neutral. This suggests that investors are still feeling bullish about Uni's prospects.
Exactly, and this positivity could be a sign of things to come. We've seen in the past how social media sentiment can be a leading indicator of price movement, so it'll be interesting to keep an eye on Uni's performance in the coming days and weeks.
Definitely. Moving on to our next story, we've got some analysis from crypto asset manager Bitwise, which is making a compelling case for Ethereum being undervalued. According to their note, Ethereum has reached one of its deepest undervaluation zones in years.
That's a pretty bold statement, but when you look at the data, it's hard to argue with their assessment. Ethereum has been consistently underperforming against Bitcoin since late 2022, with ETH/BTC values suffering as a result. At the time of writing, 1 ETH buys 1.027 BTC, which is down 47% over the past 12 months.
Ouch, that's a significant drop. But Bitwise is making the case that this underperformance is not a reflection of Ethereum's fundamental value. Instead, they believe that Ethereum is being unfairly discounted by the market, creating a buying opportunity for savvy investors.
It's an interesting argument, especially when you consider the progress that Ethereum has made in recent years. From the transition to proof of stake to the growth of decentralized finance, DeFi, on the platform, there are plenty of reasons to be bullish about Ethereum's prospects.
Absolutely. And we'll be exploring this theme further throughout the episode. We'll be talking to some experts about the future of Ethereum and what investors can expect in the coming months. But for now, let's keep the conversation going. What do you make of Bitwise's assessment of Ethereum's undervaluation? Do you think they're onto something, or is this just a case of wishful thinking?
Building on what we discussed earlier about the recent dip in crypto prices, it seems like Ether is poised for a rebound to $3K from oversold levels, according to some analysts. A report from 10x Research highlighted a few key catalysts that could fuel an ETH rally.
That's right. The report mentioned the recovery from oversold momentum indicators, the upcoming Pectra upgrade, and even Wednesday's CPI report as potential drivers of an Ether rebound. We've seen longer-term investors stepping in and buying the recent dip in prices, which is a promising sign.
LMAX strategist Joel Kruger noted that Ether is showing signs of a potential rebound after hitting its weakest price ratio against Bitcoin recently. It's possible that we're seeing a shift in investor sentiment, with some traders taking advantage of the lower prices to accumulate more ETH.
And speaking of taking advantage of market opportunities, we've been seeing the benefits of decentralized exchanges, DEXs, in recent weeks. We caught up with CoinGecko's Bobby Ong to talk about the pros and cons of crypto centralized exchanges, and it's clear that DEXs have some key advantages.
That's especially true when it comes to trading meme coins, where time is money. We saw this play out with the launch of Dollar Trump on Solana, which surged past a $14.5 billion peak market cap on DEXs like Uniswap and SushiSwap. If traders had to wait for a centralized exchange to list the coin, they might have missed out on some significant gains.
Exactly. DEXs offer a level of speed and agility that centralized exchanges just can't match. And when it comes to meme coins, which can experience explosive growth in a matter of hours, that speed can be the difference between making a profit and missing out on the action.
Of course, DEXs also come with their own set of risks, from liquidity issues to smart contract vulnerabilities. But for traders who are looking to capitalize on the latest meme coin craze, it's clear that DEXs are the way to go.
And with the rise of DEX, we're seeing a shift in the way that traders interact with the crypto market. It's no longer just about buying and holding, it's about being able to move quickly and take advantage of new opportunities as they arise.
That's a great point. As the crypto market continues to evolve, it's clear that traders need to be adaptable and willing to experiment with new strategies and platforms. Whether it's trading on a DEX or accumulating ether ahead of a potential rebound, there are always opportunities to be found in this space.
Absolutely. And we'll continue to bring you the latest news and insights to help you navigate the world of crypto. Stay tuned for more on these developing stories.
We just discussed how the crypto market has been showing signs of recovery, and it's interesting to see how publicly traded crypto firms are performing in this landscape. According to a recent report by JP Morgan, these firms are actually beating the market.
That's right. The report found that the market cap of publicly traded crypto firms, including Coinbase and Bitcoin miners like Marathon and Riot, grew by 14% in January. This brings their total valuation to $108 billion.
To put that into perspective, the crypto market itself ended January with a market cap of around $3.2 trillion. So these publicly traded firms are clearly outpacing the broader market.
It's worth noting that this growth is likely due to the increased transparency and accountability that comes with being a 924 publicly traded company. Investors may be more confident in these firms' ability to navigate the regulatory landscape.
Speaking of regulation, we've been following the developments at the Securities and Exchange Commission, SEC, and their new crypto task force. Commissioner Hester Pierce recently shared her thoughts on the jurisdiction of meme coins.
That's right. In an interview with Bloomberg, Pierce said that meme coins, like Solana's Trump, are unlikely to fall under the SEC's jurisdiction. This is interesting, given the rise of these types of coins and the confusion around their regulatory status.
It's also worth noting that this is not an official ruling, but rather Pierce's interpretation. However, as the head of the SEC's crypto task force, her views carry significant weight.
This raises questions about the broader regulatory framework for crypto assets. If meme coins are not considered securities, what does that mean for other types of tokens and coins?
It's clear that the SEC is still grappling with these issues, and we can expect to see more guidance and clarification in the coming months. In the meantime, investors and developers will need to stay vigilant and adapt to the evolving regulatory landscape.
And that's exactly what we'll be doing here on the show, keeping a close eye on these developments and bringing you the latest insights and analysis.
So we just wrapped up discussing how blockchain technology is transforming various industries from finance to gaming. Building on what we discussed, I'd like to dive into some exciting developments in the automotive sector.
Absolutely, I'm intrigued. What's caught your attention?
Chinese automaker BYD just unveiled a self-driving car that's remarkably affordable, priced at just $9,500. The Seagull hatchback now comes standard with their God's Eye driver assistance system, which is impressive considering it's their cheapest car.
That's a game changer. I mean, we're talking about a car that's a third of the cost of Tesla's cheapest model, the Model 3. This could democratize access to self-driven technology, making it more accessible to the masses.
Exactly. And it's not just the price point that's noteworthy. BYD's decision to make self-driven capabilities standard across its entire lineup, from luxury to budget-friendly models, shows a commitment to innovation and safety.
Speaking of innovation, I'd like to pivot to some updates in the crypto space. We've been following the progress of various ETF applications, and it looks like Solana ETF applications have reached the next stage in SEC review.
That's right. The Securities and Exchange Commission has opened up public comment on the Canary Solana Trust, a proposed ETF from Canary Capital. This is another significant step forward for the crypto industry as it inches closer to mainstream recognition.
The 21-day comment period will be crucial in determining the fate of these Solana ETF applications. If approved, it would mark a significant milestone for the Solana ecosystem and potentially pave the way for other crypto ETFs.
It's interesting to see how these developments are interconnected. The growth of the crypto market is driving innovation in various sectors, from automotive to finance. As we continue to follow these stories, it's clear that the boundaries between industries are becoming increasingly blurred.
Well, we'll be keeping a close eye on these developments and exploring their implications in the days to come. The intersection of technology, finance, and innovation is an exciting space to watch, and we're eager to see what's on the horizon.
It's been quite a day in the world of crypto, with Cardano V-Odd taking the lead in the CoinDesk 20 index with a 13.6% jump. We discussed this earlier, but I think it's worth revisiting. What do you think is driving this surge?
I think it's a combination of factors. We've seen some positive developments in the Cardano ecosystem with new partnerships and updates on their roadmap. Additionally, I think investors are starting to take notice of ADA's relatively low price point compared to some of the other major coins. It's an attractive entry point for those looking to get into the market.
That's a great point. And speaking of attractive entry points, we also saw Litecoin, LTC make some gains today. What's your take on LTC's prospects?
I think LTC is often overlooked, but it's a solid coin with a dedicated community. It's been around for a while and it's got a proven track record. I think it's a good option for those looking for a more stable investment rather than trying to chase the next big thing.
Absolutely. And on the topic of stability, I want to touch on the comments from Fed Chair Jerome Powell. He stated that there will be no U.S. CBDC under his watch. What do you think this means for the future of digital currencies?
I think this is a significant statement. Powell's stance on CBDCs has been clear for a while, but to explicitly rule it out under his watch is a big deal. It means that the U.S. is unlikely to join the likes of China and other countries in developing a central bank-issued digital currency. Instead, I think we'll see more focus on private initiatives and decentralized systems.
That's a great point, and I think this highlights the tension between centralized and decentralized systems. We've seen governments and institutions try to exert control over the crypto space, but ultimately, it's the decentralized nature of these systems that makes them so appealing.
Exactly. And I think this is what makes the crypto space so exciting. We're seeing a fundamental shift in the way we think about money and value, and it's being driven by decentralized technologies. It's a wild ride, but it's also full of opportunities.
Well, that's all for today's show. As we wrap up, what are your key takeaways from the day's stories?
For me, it's the continued strength of the Cardano ecosystem, the potential for Litecoin to make a comeback, and the implications of Powell's comments on the future of digital currencies.
And looking ahead to the market, what can our listeners expect?
I think we'll see continued volatility, but also opportunities for growth. As always, it's essential to do your research, stay informed, and never invest more than you can afford to lose.
Sage advice. Thanks for tuning in, everyone. We'll be back tomorrow with more crypto news and analysis.
Until then, stay crypto savvy.